Are gold prices breaking out and are oil prices breaking down? We're going to talk about some of the price drivers in both precious metals and also oil prices, even how oil prices are created in the first place. Through this video, you're going to get a good idea of where you think certain commodities are headed, if they're going to do better or worse based on everything we talk about in this video. For many of you, this is your first time here. My name is Peter Leeds, and along with my extraordinary team, we publish one of the most popular financial newsletters of all time. Nothing we say in this video is intended as personalized trading advice for you. Oil is the second most common liquid on the planet. And what most people don't realize is that the prices of oil are dictated by two rooms of traders. One room in London, one room in New York. The decisions of those traders, based on things that are happening, macroeconomic events, those decisions of those traders dictates how they trade oil, and that's where the prices are derived from. And most of those traders, just like myself and very likely you as well, have not even seen an actual real-life barrel of oil ever, but they don't really need to for their job. But you guys might have noticed I'm a bit gun-shy with oil, calling those kinds of investments, because there's so many things that can affect oil prices, and some of those things are based on how oil prices are going. If oil prices are too low, they can come along, and Saudi Arabia or OPEC Plus can come along and go, we're going to limit production and we're going to artificially cause the price to go higher. That is technically an unfair situation for any investor, and that's why I'm always gun shy. I say that oil prices will decline as the economic activity declines as we enter the 2023 recession. But now there's so many factors of different countries, different groups, interest groups that can affect how oil prices trade going forward. So it's very tricky. It's a very dangerous game. Some of the things that can drive down prices of oil, if there's a lot of peace worldwide, not a lot of wars raging, if there's lower economic activity, if we find alternative energy sources, just like you're seeing with wind energy off the coast of England right now, you're seeing a lot more wind energy even on my drive to Detroit from Toronto. And then you say, what about all these electric cars? Isn't that a step in the right direction? Yes, but it's not going to significantly affect the price of oil. Number one, to make an electric car takes several barrels of oil for the tires, for the plastics, for the machines that assemble or build the car, for the employees that have to get to the office to work on the project. And always remember that electricity is not an energy source. It's a means of transporting energy. You have to generate the energy by burning oil or burning coal or hydroelectric where the water's falling off the waterfall and you can generate energy that way. But then you can convert it to electricity to pass it on to wherever you want it to go, but that's not an energy source. As well, if we have any more new finds of oil, big reserves, but most of the findable oil on the earth has been located. Of course, there'll be some finds that they didn't know about, but they've explored just about everywhere. They even know that there's a massive deposit of oil underneath the Arctic ice. But it's just incredibly difficult to figure out how to extract that oil. And they've tried. Several companies have tried. We're not yet there with the types of technologies we're going to need to find a way to extract oil from the bottom of the ocean in the Arctic from a floating oil rig. Or for example, the Canadian tar sands, where you can reach down onto the ground and pick oil up with your hand. But the problem is, even though there's a ton of oil there, that oil has sand in it. You don't want sugar in your gas tank. You don't want sand in your oil. So it all became about building the technologies that can take the oil out and separate it from the sand. There's those kinds of social shifts among society. Say, for example, everyone's driving gas-guzzling SUVs. The price of oil goes up. A lot of people will stop driving those kinds of cars. So the manufacturers have to change the types of cars that they're going to be selling because the world is looking now for smaller cars because of the price of oil. That's just an example. I'm not saying that's happening right now, but it's happened in the past. Hey, if you want to get more videos just like this one, please consider supporting our work and joining the Peter Leeds Army. But what's going to bring prices of oil down? One of the major things that I've talked about a lot is the declining supply. We have about 55 years left at current extraction and usage rates before the entire planet runs dry of all of the known oil reserves that we've located. Another thing that's going to push prices higher, and it will be a backfire, are these sanctions they're putting on Russian oil, trying to cap the price that Russia can sell the oil at. I understand the strategy. I understand why they're doing it. I understand about the plight of the Ukrainian people right now. But these sanctions are ill-advised because they're going to backfire. They're not going to affect how much oil Russia sells, nor the prices it sells it at. But they're going to look good as politicians. A plan by the major G7 economies, backed by the European Union and Australia, is to cap the price at which Russian oil can be bought, but it has created uncertainty in global markets. Uncertainty is worse than bad news. I've told you guys that so many times. The uncertainty in the market is going to put more pressures on the price of oil. This is an article from CNN that I'm quoting here, and now the next part goes on to say, but experts also point out that a total ban on Russian oil could have led to further market instability and possible oil price rises, from which Moscow could benefit. Exactly. And that's one of the things too about oil prices, how they can be affected. If there's a country with a lot of military and they're an oil-rich country, they can invade another oil-rich country and put the price of oil higher and therefore sell the oil that they do have at a better price. And it's good for the economy for them to go to war. But here is a chart of imports of Russian oil by China and India. And now Sri Lanka is trying to be one of those countries as well, other Asian countries. But Pakistan has been showing interest in an oil deal just like the one that India got, where Russia was selling oil to India at something like $20 a barrel discount for a while. I haven't checked lately to see what that discount's at now, but Russia has a commodity. You never have trouble selling a commodity. Somebody will always buy the commodity, whether it's America or India or Pakistan. And even if all the G7 countries and the European Union says we're not going to ever buy Russian oil no matter what, Russia will be selling just as much oil that very day. Oil prices can be driven higher by a war premium, or if there's global instability, if there's supply constraints, sabotage on an oil refinery or on an oil pipeline. All of this we've seen, much of it this last year. The problem I'm saying is that in both cases, whether oil prices are going higher or lower, OPEC Plus can decide how they want to affect prices. Now pay attention to the language I use here, because there was a conference in Baghdad in 1960, and that was when they created OPEC, which included Iran, Iraq, Kuwait, Saudi Arabia, and Venezuela. They decided, hey, let's all go together and price fix our product that the whole world wants. That's exactly what they did. And these countries were later joined by Qatar, Indonesia, Libya, and then eventually in 1967, the United Arab Emirates. And then 2 years later, Algeria, 2 years later, Nigeria, 2 years later, Ecuador, 2 years later, Gabon. And then it was about 33 years later that Angola joined, and that was 2007, 2017, Equatorial Guinea, and then most recently in 2018, the Congo joined OPEC. But they do something really clever here that I think is brilliant. And they just said OPEC Plus is all the other countries that produce oil that are not in OPEC. So basically, every oil producing country is either an OPEC or OPEC Plus. So that includes countries like Azerbaijan, it's not an OPEC, Bahrain, Brunei, Kazakhstan, Malaysia, Mexico, Oman, Russia, South Sudan, and Sudan. And each of these countries has representatives or ambassadors that can sit together in a room and talk about where they want the price of oil to go. That makes it completely unfair for investors. Even if you're the best investor in the entire world, you don't know the minds of these groups. You can speculate, and sometimes you'll be right, but don't ever think that when you see a headline that, oh, they found some new oil reserves, well, that means such and such, or that means oil prices will go lower. It doesn't. Oil prices decline when the groups of traders in the room in London and the room in New York trade oil for lower prices because of their opinions of how these macro events are going to be affecting oil. But you've seen oil prices drop precipitously over the last few weeks. And I went with Jane the other day and we filled up my minivan, the same gas station we go to all the time, and it was about $30 less to fill up the tank on the exact same vehicle, at the exact same pump, at the exact same station. This is going to be a major deflationary effect. I'm telling you, inflation is coming down. It's going to be coming down rapidly. This is going to push it even faster. But while oil is breaking down, Do you think that maybe gold is starting to break out? And I will just jump to the end here and tell you that it isn't breaking out. It's more like a melt up. It's just like a bucket filling with water, getting closer and closer to the top before it starts spilling over. And if you're not going to buy gold, you're not going to buy gold mining stocks, don't hang up. Just stick with me for 1 second, because this applies, what I'm going to tell you here in this part, applies to any kind of investment, because we're talking about support and resistance levels. We're talking about breakouts. So just bear with me and think of whatever stock you want, but I'm talking in this example about gold mining companies. You're seeing the price of gold swing wildly, big moves up or down day to day now. And that's generally when you see a market top or bottom, you start to see the volatility of the underlying thing increasing. It's becoming more volatile. The moves are more significant in either direction, but they're just more significant. And I think in this case, it is indicating a market bottom for gold prices. But I'll show you this chart of Newmont Mining. This was the support and resistance I was telling you about while Newmont Mining shares consolidated. And you can see here now, it's broken out, and it should now, this is a support and resistance level around this range-bound trading, but then when it broke above the resistance level, that will now become a support level. And generally a stock that breaks out of a resistance level like that generally has a lot of upward momentum going forward. This is a chart of Kinross Gold. This wasn't indicative of the entire industry or their direct competitors or anything. This is just a very bullish, encouraging, strong uptrend. When you see a stock that you have that goes up 15%, drops 15% all of a sudden in a couple of days, you should look at their direct competitors and all the other companies in their industry and see if it happened to every company in the industry or just the one that you own that you're looking at. Because if it's every stock in the industry drops 15% in a day, then you know it's a market-driven risk or effect. But if only the stock that you own drops 15%, you know that's a company-specific risk or a company-specific reaction to something that happened. You better figure out what that is so that you know if you want to keep owning these shares of that stock. But the main reason that I personally like gold mining stocks very much right now is because their profit margins are very tiny at the price of gold. So if they're making $10 an ounce that they extract and sell, and the price of gold goes up $20 more, then they're making $30 an ounce. They're tripling their profit margin from a small $20 per ounce move in the price of gold. That's why I think that gold mining stocks, high quality ones that don't have a tremendous amount of debt, those companies with big proven reserves in the ground, these are the ones we talk about in the newsletter. I believe that's one of the biggest opportunities right now. Among others, there's other opportunities coming up, such as the one that I always talk to you about, the absolute capitulation in Bitcoin, which we are not there yet. We are not close yet. But when we drop closer to under $7,000 per Bitcoin, we'll talk about it again, because then we'll be part of the way to this capitulation point that I'm telling you about, that you should be loading up on Bitcoin at that point. And we believe that rare earth elements, certain companies in the space, are going to have a lot of attention on them. The more China keeps acting like they've been acting lately, and it's starting to build up a military feel between what they're believing in and standing up for and what we're believing in and standing up for. This will be the next Cold War. We had one with Russia before, now we're going to have one with China. And since China has about 85% of the world's rare earth elements under their control, and rare earth elements are very important for a lot of military technologies, then this is going to be something that's going to be in the news more and more, and there will be a lot of governmental programs to develop the American rare earth elements industry, and therefore perhaps put a lot of political beneficial pressure behind some of these smaller companies that are trying to develop rare earth element extraction capabilities. And a perfect companion video to this one is right here. It's telling you what to do about all these things that are happening already. Real estate prices coming down, cryptocurrencies coming down, and stocks coming down. All at once, all coming down together. Watch that video, you can know what to do about all of this.